Stavros Tousios for M4Markets. Today we're going to look at WTI and also prices of silver. It is as simple as pulling a trend line sometimes, and this is why I'm starting with this here today, because if we do see how many times we've attempted to go low and stopped at this level around 66.80, and the times that we've attempted to break high and we didn't manage to, tells us that this kind of looks like a descending triangle. Okay, we have a triple bottom and we have a descending trend line coming all the way down to close to 71. So we see some sort of divergence here, and for oil we haven't seen a divergence for a while, and this suggests, since we're also above the RSI 50 in the 4 hours, that we might see that continue up to around 71.40, 71.50, or close to that trend line before we see any other sort of price action coming to fruition. It looks like to me as well that this is an important level at 69.70, that if we manage to break past the previous peak over here, then the likelihood to move all the way up towards that trend line is going to increase. We do see some sort of hourly divergence here as well, right? So, there might be some sort of correction here for the short term, which if it manages to stay above the 68.30, 68.40, could see that upside leg that RSI is showing, because we can also see this 1 hour RSI bullish divergence printed here. This is the idea that as long as we are above 68.40 or so, the chances of a leg up towards 71.60 increase. In case we lose 68.30, or if we go back to the previous low around 68.680, and of course the chances of further continuation to the downside are going to increase. Before we go to silver, let me just also tell you that we have a much stronger trend line at around just above the 70 level. Just pull it down, connect these two peaks, and wait and see how price action reacts around that trend line. Now, when it comes to silver, we're looking at silver because there is also some sort of divergence that we haven't seen divergence on silver to the upside for a while. For the moment, okay, here and here, this is somewhat of a zone for us, okay, and this is between 22.13 and 24.51. The signal from the RSI tells us that this could move higher because there is some sort of momentum. Then there is also this signal that tells us, well, look, there is also hidden bullish divergence over from here to here. So we have two opposing signals, okay, and these two signals, typically because they are opposing and they point to the same direction, are a good indication of a potential, well, in this case, upside. So our market low is at 22.20, whatever that was, and our market top is at 24.55. So there is way more room to go all the way up rather than all the way down. That means the risk to reward ratio in this particular case, it's fairly good. On a different note, we have already come up in somewhat of a 5-wave move over here anyway, and we have corrected. Okay, so now what remains to be seen is whether anywhere between 38 and 62, okay, we can actually get some sort of momentum driving prices higher, okay, because this is somewhat of a correction. This is the first leg to initiate to the upside. Whether it tends to a correction like this and then we fall, or a correction that extends higher, is to be seen. But still, from the structural intricacies here, we see that there is higher probability that a bounce over here would potentially see another leg to the upside. If that were the case, and if we just assume that the low is in over here at around 22.53, typically these two waves are equal. So the 100% brings us around 23.55. If this is not a correction though, and the low is in here and we're gonna head for higher levels, then we could see that wave actually extending anywhere between 23.82 and 24.17.